understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome back for another episode of the Tech Behind FinTech. As always, happy to be here, joined by my guest, Stanley Egbuchulam, CEO of Accounting Events. How are you today, Stanley?
I'm good, thanks, Nnamdi. Nice to join you.
Oh, it's always a pleasure. So he's a returning guest, so he's a friend of the show. Today's title, Breaking Down Why Regulatory Penalties for Financial Institutions Rose 31% globally. We're going to drill into that. The reasons behind it, give some examples of banks that recently got fined, and understand why and what could be have done to prevent that. Before we jump into it, let's do some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, Twitch. We also have a stream going from Instagram. Instagram folks, if you want to be part of the show, go to the techbehindfintech.com, and then you can put your comments and we'll list the comments on the show when you have YouTube links and so forth. To everybody else on LinkedIn, YouTube, Facebook, feel free to drop in a comment. We'll add it to the show. So without further ado, let me get my things ready and let me formally introduce my guest, and then we'll get into today's topic. Mr. Egbuchulam is the CEO of Accounting Events and is a results-focused leader in the accounting field with over 20 years of experience. His strong leadership, problem-solving, team building, and staff development skills allowed him to establish, manage, and elevate world-class accounting policy functions for numerous Fortune 500 and Fortune Global 500 companies. He solidified his accounting experience early in his career, having worked for the Big Four public accounting firms such as PwC and Ernst & Young, where he audited banks, broker-dealers, mutual funds, in addition to conducting single audits for federal government programs. Mr. Egbuchulam was an adjunct instructor of accounting at the New York University School of Continuing and Professional Studies, NYU SCPS, as well as St. Francis College in Brooklyn, New York. Honored to have you back and to jump into today's topic.
Yes.
So, I mean, where do we begin, right? We're seeing, generally this number, this stat, 31% increased in regulatory fines. But let's get an example going, right? So there's quite a few examples in the last couple of weeks. One of the biggest ones I saw was I saw quite a few big ones. One, let's go into this. Like we have one where the 26 firms pay the SEC $393 million for record-keeping failures. So just a quick summary of that. Let me get a quick summary of that, right? So widespread record-keeping failures. 26 firms, including broker-dealers and investment advisors, have been penalized by the SEC for widespread failures in maintaining and preserving electronic communications, which are essential for regulatory compliance. The penalties total $392 million. Some of the firms include Ameriprise Financial Services, Edward D. Jones, LPL Financial LLC, Raymond James and Associate, BNY Mellon Securities, RBC Capital Markets, OSAC Services. So it's quite a few on the list. I'm not going to go through all 26, but and what they also said was some of the firms that basically self-reported, they paid less in fines. So let's go through that, right? Like, I know there's different examples from AML, but let's start with this record-keeping example. What do you think?
Okay, so the record keeping that you mentioned the SEC. SEC is not really the regulator that has oversight over maintaining anti-money laundering activities, AML. SEC is mostly responsible for good financial reporting to investors. So with respect to record keeping, they didn't really give any much details there, but the SEC will review from time to time the practices of the individual filers that file with the SEC, just to see whether records are maintained, for auditing and reviewing purposes. The SEC also will, from time to time, go to require, make a request. It may be as a result of some investigation, unrelated investigation, that they'll make a request and say, produce these documents. We want to go through and see what's going on. So if the documents are not being produced on a timely basis, it might lead them to again go and conduct an examination. During the examination, they will review your processes, your policies. Each bank or each filer has a different policy with respect to how long they maintain records. Some may maintain records for 5 years and then they purge them, some 7 years. So it depends on your cost, how much budget you have to maintain records. Records are very expensive to keep, as you can understand. So
let me ask you a question on that. When you say records, are they the physical records? Can they digitize?
They're electronic. They're
Okay.
electronic. Okay. They're electronic records. Okay. Data storage could be expensive. Okay. For companies that have millions of transactions on a daily basis. You understand what I'm saying?
I know from a technology perspective, like what we're seeing is like storage is cheap. I mean, when you start looking at, if you look at cloud storage and look at these long-term solutions, a lot cheaper than before. But, as you mentioned it, right, you have millions and millions of transactions. Out of curiosity, I wonder like how much storage space that really is. Are we talking terabytes? And things of that nature. So it's interesting to think of this.
It's terabytes. Let me give you an example. So when I was at American Express, as well as when I was at BNP Paribas, okay, each department, each team is allocated a certain size of storage. And from time to time, you'll be required to clean up. I can put in a request. I say, I'm running out of space. Okay, this is like shared drive within the company. The controllership could be allocated a certain size. The legal department could be allocated a certain size. So if you run out of space, you are forced to delete old documents. And you have to follow whatever internal policies that they have there. You talk about cheap storage. It's easy to go and buy terabytes of storage. Yes, that's cheap. It could be cheap to companies. But remember, some of the data that these companies maintain are what they call the personal identifying information, the PIIs. Yeah. So there's an additional layer of security that they have to pay for to protect those things. Because what if they get out, they could be sued and it will cost them even, a lot of money.
100%.
So it may not just be the terabytes of space or storage, the maintaining it and making sure it's secure, encrypted, or whatever security measures you have to put in place. That contributes to the cost. But, back to what we were saying, maintaining records, I don't even think that the SEC would give you a certain number of years of record you have to maintain. Each company, as far, based on my experience, each company will have their own internal policy as to how long they want to keep, records. But the fact is, if there is an investigation, maybe prompted by some kind of criminal activity, okay, they want to go back and see how far it's been happening and how far it has not been detected. So when to be able to do that, you have to, find the records related to those transactions. So if you find out that they're not being kept, okay, or if they're no longer available, maybe I think, the example that you gave, that's probably what it might be related to. But I don't think that there is any SEC filer, current filer, that would not have sufficient records, because whatever records are necessary to support your financial reporting, your auditors also will have to look at them. Okay, so you have to have backup for most things you report. So I don't think they relate to like current transactions. It may be some historical data that they expected them to keep and they're not keeping. I haven't read that article, but I would tell you that it may have to do with like, way back and not, recently.
Yeah, like one of the things that they mentioned, in addition to financial penalties, the firms were ordered to cease and desist from future violations and were censored. Supervisory failures. The firms were charged with failing to reasonably supervise their personnel, highlighting the importance of strong internal compliance and oversight mechanisms.
Is this related to AML?
No, this one.
I don't think it's related to AML.
No, this one is just like the general gist was like around record keeping and so forth. But the major one around AML has to do with Toronto Dominion, otherwise known as TD Bank, and AML practices. They had to set aside an additional $2.6 billion in its fiscal third quarter results, anticipating a year-end resolution of investigations into its anti-money laundering practices by U.S. regulators. This brings the total estimated provision for compliance failures to $3 billion, including the $450 million announced in April. What's crazy about that, though, before we jump in, they had to the swab stake sales, or to fund the anticipated penalty. TD Bank sold 40.5 million shares of Charles Schwab, reducing its ownership stake from 12.3% to 10.1%. The sale is expected to increase the bank's common equity tier ratio by 54 basis points in the fiscal fourth quarter. So please, let's jump into that.
Well, this penalty is as a result of a violation of anti-money laundering regulations. What I understand from this particular offense is that they did have procedures in place to detect and comply with anti-money laundering measures. But what happened was an internal employee intentionally, looked the other way and let the supervisees process transactions for a sanctioned entity. I think I'm trying to recall this particular incident.
Let me say right here, I have it right here, right? Allegations of employee misconduct. Federal prosecutors have filed cases alleging that TD branch employees in New York, New Jersey, and Florida accepted bribes to move illicit money.
Yes.
In response, TD Bank has fired about a dozen frontline workers and replaced around 10 senior leaders in compliance and legal roles. Just to add, I just wanted to put that.
So this one is, I think the fine will be more like, so you're supposed to have your internal compliance procedures, how to detect money laundering activities. So the problem is you could have those procedures in place, but then they failed to stop the kind of illegal transaction that went on. So management is supposed to be part of the anti-money laundering procedures that are put in place. So this transaction, I think the transaction that the gross amount of the transaction that led to this fine, this violation, it may have been about $900 and something million, but the fine is going to be $2.6 billion. This is just too penny wise, pound foolish. But so there is a requirement, right? Now, there are steps that each bank is required to take. You have to put in procedures. Number one is KYC, for instance, know your customers, right? You're supposed to understand your customers, know what their business activities are, and be able to justify that the kind of money that is moving in and out of their bank account can be supported by the kind of business that they are in. Okay, that's one of the ways. During onboarding of each customer, banks are required to get the identity of the owner of the account. Okay, this is what do they call it? Customer
KYC, right? Is it know your client?
It is KYC, you know your customer, but there is another term they call it more like I remember the term, and I'll let you know. So pretty much you're supposed to identify who is the owner of the account. Make sure that the ID that they give you is valid, is state issued, and is not a fake. Okay? If they give you a fake, you're supposed to report it to the regulators. So once you confirm that that's what they are, you want to understand what is your business? Why are you opening this account? And all these procedures, you apply them at the very first time they open an account with your branch. But then you have to, every year on an annual basis, review and confirm that the information you have in your records are still consistent, are still are applicable to that particular customer. So you have to have a compliance team whose responsibility will be performing all the anti-money laundering activity procedures. And there must be documentation that they are actually performing them. Okay, so all this, you have to also train them. There has to be training for not just the compliance department, but every employee of the bank must undergo this training, and they must be registered. The regulators can come in anytime, and they want to see documentation, proof that all the steps that you're supposed to take, that you're taking them. So every time, some of the fines you will see for AML related violations, they're not always transaction related. Sometimes it's failure to put in place these procedures that we're talking about right now. So that's, that's the way it is. So these guys get fined. They're going to pay as much as 2.6 billion for helping a money launderer move money through their system that is only about 950 something million dollars. Of that 950 something million dollars, they probably earned commission for only 12 million at most, right? But they're going to pay a fine for 2.6 billion. So that's why it's very important to make sure you have your processes up to date and that you are performing every step in your policy with respect to AML. Now, there is one other thing. There is a kind of report. It's called the Suspicious Activity Report, SAR. Okay, what that means is somebody comes in and wants to withdraw $9,999
dollars short of the 10,000 reporting
yes.
to the government. Yeah.
Or they make a structured, withdrawal in a relatively short period of time in sequence. So you are supposed to report whether it's legit or not. You are supposed to fill out that report and send it to the regulators. There is an arm of the U.S. Treasury called FinCEN, right? Financial Crimes Enforcement Network. So they collect all the reports that are generated. You have to, prepare the report as you are witnessing what's happening. That doesn't mean that you won't do the transaction. You're going to do the transaction unless it is so glaringly suspicious that you say, a bank can say, we cannot do this, transaction, but you're not going to tell them that you are going to report it to the regulators. So FinCEN collects all the information and then runs them through sophisticated computer system to detect patterns, by customer. That same customer may have other accounts with other banks, So they somehow try to link them and see what is going on. And when they find anything that is wrong, then they're going to let the regulators know and law enforcement if necessary. So if a bank fails to file a SAR, and then the regulators find out that there was a actual money laundering activity that involved that particular customer in that particular bank, the fine is very exorbitant.
So let's rewind. That's really interesting, that whole sequence of events, right?
Yeah.
So, a suspicious activity report doesn't seem, it's subjective to the individual, right? I may be working on the front line and I may miss it. I may say, this didn't look suspicious to me, and let it go through.
You know why you would say that?
Wow.
Because you're probably not trained, and your bank will be fined for not training you.
Wow.
Okay. And you are also, if you see it, you have a supervisor that you will go to, and that supervisor could run it by the compliance department to see. Okay. So the compliance departments now, for well-to-do banks, have databases that are updated by the minute. So they can run the customer through that database to see, if anything, shows up, if any red flags, kind of show up. So if there are no red flags, it's still suspicious. So prepare the report, send it anyway, okay? And then go ahead and complete the transaction, okay? Unless the bank manager says, nah, this is too weird, I don't want to do it. So that's just the way it is.
I wonder in practice, how does that actually work? So a person notices this. Now, I wonder the technology that's used for that process. I mean, I wonder if it as they're doing the transaction, there must be something in place, software in place, to alert them of a SAR. That I would think that's how it probably works.
Let me give you an example that hits home. Okay, so I have a nephew who is based in Nigeria, and he comes to the US every once in a while. He is a contractor for Shell, okay? And Shell, based on the terms of the contract, he is part of his payment is in US dollars and others in Nigerian naira, okay? So he came to the US and wanted to have a bank account. So I took him to TD Bank. So we were able to open a bank account for him with my address, right? My address. So he wanted to make some, major purchases that he wants to send back to Nigeria. So he ran out of dollars, and he wanted to know if there are any persons here that wants naira, because he has a lot of naira back home. They will give him the dollars he needs to do shopping here, and then they will get naira back home. And then a few people, I was up to 7 people, started to, sell him money into this TD Bank account. So, and then it happened within a period of 2 or 3 days, he got up to $30,000 in the bank account. So when he went to make withdrawal from the bank, they blocked it. Okay, so TD Bank blocked it, and he told me, I said, okay, let's go. He said the branch not too far from here. So we went there, and they said that they're not allowed to tell us that they filed a suspicious activity report. Okay. But while they filed it, they flagged the account as too risky for them. Their compliance department said that they were going to close the account.
Oh, wow.
And they closed.
What happened to the 30K?
No, they closed the account and wrote him a check. They sent him a check. Okay, but they closed the account. They say it's too risky. The kind of transactions being done was too risky for them. They didn't want to take any chances. So I go there. I say, but there's that. I say I can vouch to the transactions. I tell them. I say I even have an account here with you guys. So, and they said, "Do you have your debit card?" I said, "Yes." They took my debit card.
You're about to be flagged.
And asked me to wait. I waited for about an hour before they came out and gave me.
Yeah, they were investigating your transactions.
They were investigating me too, because me and this guy were related. Right? So really, if any bank can close your account, terminate the relationship anytime they think you are a potential problem for them. They have their risk management procedures, okay, and they have their checklists. If anyone that meets a couple of things there, they close your account. It's not just TD Bank, any bank at all in the US here, they will just close the account if they think it's too risky for them. So
no, I mean that's totally interesting. And he definitely, and I mean, based on the example now, we have to definitely assume once your account is blocked, you're definitely going to get a suspicious activity report.
They do that every time. It's not every time that it means that something is bad, but you err on the side of caution. That's what they do. Okay, it's file the report anyway. It doesn't. It will save you a lot of penalties if things go the other way, if it meets some of the suspicious transactions actually. So they have procedures. They have to follow those procedures, right? In addition to the standard, the base requirements, some banks go above and beyond to even institute their own rules, which are stricter, more restrictive than like the general ones. So it depends.
Wow. Yeah. The suspicious activity report definitely seems interesting. I mean, these are things that people from a customer side, they don't really have knowledge of, all the inner workings and the things that go on in the background.
The customers, they usually don't know. They wouldn't know that a report has been filed. Look, you maybe they filed a couple of reports and for you.
Oh, for me, 100%, 100%, because I have a real estate. I'm a real estate investor. I have a real estate business. So
yes,
over the last 20 years or so, certain transactions look all over the place. None of my accounts have been closed. I've been called in, but I'm 100% sure with the transactions going out from contractors, certain things coming in from a refi, going back, 100% sure. 100. I mean, but because on one side is this, computer consultant, everything straightforward and button up, and on the other side, there's a ton of transactions going back and forth where the account goes real low, then it shoots up high, it goes low. It's a lot going on. So I'm but I can't remember a time when my account was closed. Now I've had certain things get temporarily frozen so that they can, before we can process it, we have to do whatever. I've gotten that. Certain things stop temporarily before they can give me access to certain funds. So I've seen that happen, but I haven't seen an account closure.
They do close any account that becomes suspicious. And mind you, like I mentioned to you sometime, the money launderers have gotten sophisticated. Okay. With technology. Okay, the U.S. government has gotten sophisticated too with respect to analyzing and trying to detect money laundering activities. So then that exposes the banks, right? If the money launderer is sophisticated that they can fool a bank, and the bank will carry out a transaction that otherwise would have been stopped based on AML requirements, regulations. So then if their system is not sophisticated enough to match that level of technology, they will be in trouble. Okay, so yeah, you have sophisticated criminals hitting your bank, and then your bank, either they look the other way or maybe they're overwhelmed and they approve something they shouldn't have approved. And then the regulators, who also have sophisticated system, will find it. Then the banks will be exposed and they will be in a lot of trouble. And that's the kind of problem that banks, smaller banks, not the big banks, this is the kind of problem these smaller banks are having. The big banks have good system, okay, to monitor. And there is also, some sort of a network that they have internal applications, very expensive though, I think, that they run through every customer. Okay, because the AML procedures, you perform them like know your customer, KYC, at the point of onboarding the customer, but then you're required to review it from time to time. Okay, the SAR report I told you about, some of the report could be triggered by transactions, suspicious transactions, just like we talked about, could also be triggered by negative news about one of your customers. If you hear anything, if you read anything about one of your customers that is negative in the newspaper anywhere, you're supposed to fill out the SAR, say, more like you're being proactive. You say, we heard something like this, this customer is involved, we don't know. The reason you have to send in that SAR is that if there's anything on that customer already, the regulators, this FinCEN will have it. Okay, so when you send it in, it helps them. If you don't send it in, you have to answer to them at some point, because you know what happened. The banks are interrelated, and they do transactions amongst themselves. So somebody that perpetrates money laundering activity in one bank, that same transaction may pass through another middle bank here before it hits whatever target. So if you don't report, let's say Chase reports it, but TD Bank fails to report it, the regulators will know that there's something TD Bank was supposed to report which they didn't report. So they will come to you and say, what's up with that? So
no, I mean, these are all like really, really interesting points, when you really start to look at it. I like what you said about the technology aspect, from the money launderers. Everyone's using some form of AI, machine learning, and have models, leveraging the different models, whether it's for analyzing data, whether it's for, even on the opposite side, for nefarious activities. I mean, in the world of cybersecurity, right? I mean, we have the defenders, and we have people that are actually trying to infiltrate organizations. And what people fail to realize is it's no longer, somebody in their mom's basement with a hoodie on, right? They have actual sophisticated cyber farms, especially when you start talking about nation state actors or highly established criminal organizations that, these people have offices, they come to work like a 9 to 5 or whatever hours they work. And, their main activity is phishing campaigns and different ways to get money from individuals or organizations. So from the money laundering side, I would think the same thing. And on that side, they're leveraging tech tools to help them facilitate these transactions. So when you start to think about it, right? And then if we see this 31% globally increase of regulatory fines and so forth, you have to assume now on the regulation side, they have their own tools to analyze large swaths of data to look for anomalies, look for issues, and then they can say, okay, you know, and then when you start looking at, you know, from you said like the bigger banks, like, you know, you look at banks like, you know, JP and all this, they're $1 trillion bank. They have their technology
they're up to date with their
teams that they
technology.
use. Is ridiculous, you know.
Yeah.
But when you look at community banks and you know, certain credit
unions and all of that
may not have that same level.
They may not have. Yeah.
And when you look at money laundering, those are the banks that I would target to complete certain transactions.
Or small deposits.
Oh, small deposits.
Structured deposits.
Yeah, small deposits.
The money launderers are now using cryptocurrency also, okay, to evade regulation. Some of that, well, you're into real estate. Have you ever gotten a call and somebody tells you, I'll buy your house for cash?
I mean, of course.
Okay. So that's one of the ways that they want to integrate laundered money into the financial system. Okay, they're buying real estate. And if they find somebody that would take cash, and people love cash, right? No.
So as when you start talking about real estate as an investor, you know, that's the opening line everyone uses. Everyone uses that opening line. Even
yes.
I've used that opening line. It's not necessarily, oh, like I have a bag, you know, $200,000 in my closet, right? It can be cash, but it could be from an equity line. It could be from
okay.
various. So the whole thing is, people say that so that you don't get caught up in this whole transaction is going to take a long time. I got to get approval from a bank. No, I'm going to have cash as long as the title checked out.
People say that even when, you know, they're going to draw it from their savings, right? Yeah. It's cash. So cash means I don't have to apply for a mortgage or anything.
100%.
Okay, that means I have the money. I'm going to give you the money. But I'm telling you that in real estate, that people are actually wanting to buy with real cash. It's a lot of money, but they, you know.
I've heard about that like years ago, that you would see certain Manhattan apartments that cost a couple of million, few $1 million sitting empty.
Yeah.
Empty. Like it's somebody purchased it. No one's renting it out. No one lives there. Sitting empty. And, you know, it was ways for certain organizations to basically launder their money. So no, I have read about that some years ago. It's always fascinating to me because you're like, you know, from an average investor, you would think, well, if I spent, I don't know, $5 million on a New York condo, that thing has to pop. Either I'm going to have fun with it, my family's having fun with it, or we're renting it out. But what it can't be is vacant. No investor wants to hear that. So when you see these types of transactions in which millions of properties are being bought for a few $1 million and it's vacant, and you're like, who's behind it? Whether it's a government entity, a foreign government entity, whether it's organization.
Okay. I was going to bring that up. You know that there are certain transactions that you must report, whether they are suspicious or not. You must report. So there's a class of investors or customers that are called politically exposed persons. So let's say the minister from one African country wants to open an account at Chase. Okay, they must report that to. Let's say the initial deposit is going to be a check drawn on another U.S. bank, Citibank, for instance, or maybe they're going to Zelle money from Citibank because they are politically exposed persons. That triggers a SAR report. You must report that to FinTech. You get what I'm saying?
100%.
Customers doing transactions from certain countries, you must report. Okay? because there are certain countries where there is little or no regulation, okay, to prevent money laundering. And remember that money laundering aids a lot of people who do a lot of things: terrorists, drug traffickers, human traffickers. Okay, all the people that do it, they more or less deal in cash. Okay, because once you go to the bank, it becomes traceable, right? So they put in requirement that certain customers you get from certain parts of this world, you must create a SR report and send. Even before the account is formulated, they might tell you, okay, your account will take a few days to open. You cannot make a deposit until after 5 days, because they want to do their due diligence. Okay, customer due diligence, that's the term I was looking for, CDD. And they even have enhanced due diligence, EDD, for people like people in politics. They may loot their government's treasury and want to come dump them somewhere. So these procedures must have to be put in place. And when the bank examiners come to review things within any particular bank, they are going to ask you for a copy of your AML policies and internal control. It's very, very serious for you to have a policy and skip one of the things that's written in your policy. There is no.
It's a classic thing, right? Because even I'm not on the AML side, but I'm on the cybersecurity side, and
Yes.
that's the thing. We have to have policies for everything, for especially
Yes.
for certain like regulatory. If you start talking about like GDPR or just various frameworks within that.
Yes.
Really interesting on the AML side, though. And when they perform this audit, because that could definitely result in a fine, I would assume.
Yes. But the thing is, I think most banks have strong compliance policies, and they actually put in place. Everyone's that your policies, you have internal audit or maybe other departments for accounting control that will have to look through and test those policies and procedures to make sure to find evidence that they've been put in place. Okay, each bank would want to make sure that they are complying. First of all, they write their policy and they share it. They want to make sure they didn't miss anything. They compare it. So the bank examiners, sometimes there's an examination they do. It's not to find fault and penalize you for those faults. It's to look at your procedures and then give you a report, tell you how your procedures compare to banks your size. So then you will look at it and know where you have to, assuming it's deficient, where to, kind of beef it up. Okay. So they do that. And then after they do that and you don't beef it up, when they come for real examination where they're going to have to look for faults, if they find it, the fines are hefty. And let me tell you, there was a time BNP Paribas, my former employer, had to pay US regulators. I think that was 9.2 billion fine.
Billion with a B?
Billion with the B.
Goodness.
And that created some kind of rift between the US government and the French government. Because the French government thought that, yes, there was violation. Yes, they should be fined, but that the fine was excessive. So the violation was carrying out certain transactions for Iran. Okay, clearing some money for Iran. It wasn't even done in the United States. it was done outside of the United States. Do you know why it came within the jurisdiction of US regulators? It was done in US dollars. So any crime, any financial crime you commit in US dollars automatically falls within the jurisdiction, and the US regulators can come after you. Even if the transaction didn't happen within the US, it happened outside.
That's interesting.
So, yeah.
So let's get that straight, because I didn't know that. So because BNB Paribas, that's a French bank. So the fact that the transaction took place with US dollars, but outside of US soil, the regulators still came after them.
Yes.
Well, it's because like
any financial crime denominated in US dollars makes it come within US regulation. Don't commit, if you want to commit crime, don't use US dollars, and then you can, and as long as you don't do it within here in the US.
Yeah, I'm reading about this. Happened in 2014.
Yeah.
You know, and one of the quotes from the U.S. Attorney Barra, he said that BNB banked on never being held to account for its criminal support of countries and entities engaged in acts of terrorism and other atrocities.
Yes.
You know, because it's so interesting. You know, I like similar to you. We at one point, you know, we worked next door to each other for big banks and things of that nature. And even though I was on the technology side, and I was and at the time I wasn't even an employee, I was a consultant. Every single year I had to take KYC, AML. You had to take all of the trainings, like every single person that works there, whether an employee or not. And I always thought, like, I mean, granted, you know, for certain roles in technology, you could kind of assist with certain things because you have access to the data. But I always thought, like, at the time, I was like, this is ridiculous. Why do I have to constantly take these trainings? Like, I don't work on the front line. I don't work with these.
And those trainings can be boring. And for your information, you take a test after the training. If you don't pass, if you don't get a certain percentage, like 80%, you have to retake.
Well, you just can't click the buttons. You have to actually pay attention. So as you were talking throughout this conversation, all those flashbacks of foreign entities that might engage with acts of terrorism, like you said, politically exposed individuals, KYC, all those terms are like flashing back to me because I was working with big banks from like 2001 to 2014. So I like a good 13, 14 years. Then I went more in the hedge fund space and fintech space. We don't do any of that. But for but the big banks I worked for, definitely that was a constant thing. In terms of those
you have to do. I mean, if it was a bank, there is also another part of, I think it is the U.S. Treasury also, OFAC, Office of Foreign Accounts Control. Okay, no, Foreign Assets, Office of Foreign Assets Control, and that is actually the arm of the Treasury, that U.S. Treasury, that enforces seizing assets. Like when they tell you that the U.S. government has seized Russia's foreign reserve, billions. That's because it's in a U.S. bank or a bank controlled by a U.S. entity, and they put what they call a debit block. A debit block on an account means you can only credit it, and usually, some of them will be interest bearing, and you can post a credit to the bank account, but you cannot debit. Money can come out of it. So we call them the OFAC account, and you have to. There's a list maintained, a database where banks are required to search it daily to see whether any new persons, any new entities, any new company has been entered into that list. So any of those entities that have bank accounts at your bank, you must put a debit block. You don't wait for the US government to notify you to put the block. You have to search this database. If you identify that, you put the block. So there are actually some services that monitor the database and notifies banks. Okay, if it's a service, they paid to do that, to notify the banks promptly, just to let them know that such and such accounts should be blocked for any debits going through there. So that's what's going on.
No, yeah, I was just posting it there for the audience. The Office of Foreign Assets Controls, the Financial Intelligence and Enforcement Agency, the United States Treasury Department. It administers and enforces economic and trade sanctions in support of U.S. national security and foreign policy objectives. Yep. Really interesting.
Yeah.
No, I mean, look, at the end of the day, right? Like we mentioned, different activities when it comes to illegal activities, terrorism, human trafficking, drug trafficking, whatever you name it, the fuel is money. Like, yes, they're doing it for money.
Yes. Somebody funds them.
Yeah,
somebody funds them.
Somebody funds it. They're doing it for profit and so forth. So that money has to be converted somehow to be realized the actual gain. You need banks in order to do that. I mean, once you start going out of the physical cash,
you can't be carrying portfolio of cash everywhere you go. Even though some people do it. Some people do it. But
you know what's interesting? Recently, right, because of certain economic other factors, the gold bar right now is worth $1 million.
Oh, really?
Yeah, a gold bar
is up to that now.
It's up to 1 million right now. I don't know how heavy. I'm curious. How heavy is a gold bar? I'm just gonna Google that real quick. How heavy is a gold bar? The weight of a gold bar depends on its size, but most common size is 400 troy ounces, which is about 27.4 pounds or 12.4 kilograms. The size is known as a good delivery bar and is often held by central banks and traded by bullion dealers. Interesting.
Okay, so there are bullion dealers, right? But remember that most of the gold is not in bullion. It's let me remember what they call it. So they have, when they extract gold, when they mine gold, it's called doré, D-O-R-E, right? And it's impure, okay? So they're going to have to refine it to the greatest level. And once the miners and the refiners do it, they deposit it somewhere. There's a bank in London where they put it there and they get credit, for certain quality, purity level. So if you buy that gold from there, if you buy unrefined gold, send it through the refiners, and then what comes out of it, they have byproducts that are used for other things, but the purest form of it will be deposited there in that bank. It's not in bullions. So if you want, you can, just like you write a check to somebody to go withdraw cash from a bank, you can actually write a check against the deposited gold that you have there. And what they do is that they deduct your quantity and credit that person's quantity. That's how they trade them. So it's book entry that they do. But if you want to get the bullions, you have to put in a request, right, to the bank, and they're going to carve out the bullions for you, and you're going to pay some cost for them to do that for you before you take them the bullions.
You heard that to what? Like, what are bullions? What is that exactly?
Huh?
What is that? What is a bullion? Like, I heard that term. What is bullion.
A bullion is like a block of
Okay, it's a block of gold. Okay.
Yeah.
I got it.
Mhm.
Very interesting. You know what? It might be an interesting future show for us. Is to just dive into gold, man.
I can explain gold because
I would. So let's do that. I
can explain gold process to you because BNP Paribas used to have a particular trading desk. Okay, they traded commodities. Okay, gold, silver, whatever, diamond, whatever. So there was a time they were making investment in gold. And that transaction, I had to analyze the transaction to write the accounting policy applicable to it. That was how I learned about the process, they extract gold and what they do with it. So
that would be like that. You know what? This is good. That's why you're a friend of the show, man. Because these are like topics I haven't dealt in gold. So it's one of those things like I read about it here and there, but it doesn't personally impact me. So I'm like, whatever. But I would love to dive into it, especially now that it's reached its highest price for a good delivery bar, a bullion bar of 1 million. I think then it's going to raise more curiosity. So I would like to understand the entire process, how it works. I did read about that before. You mentioned about this bank that holds all the gold bars, and you can basically it stays there. So similar to how your bank account works, right? You don't physically see your money, but we know your money's there because of the entries, the credit and debits and stuff like that. So it's a similar concept, but it'd be really good to dive into that concept.
Yeah, we can do that. I will explain the process to you. Do you know? You will know that most central banks of most countries have gold reserve, but no country can ever tell you the total value of their gold reserve. Gold is difficult to measure, and gold is everywhere. How do you measure it? How do you determine how much, the quantity, the value to place on it? So they stay away from it. Even the accountants haven't defined how gold should be accounted for. They just call them precious metals, they're commodities. You can just, do whatever accounting practices that apply to commodities, they apply to commodities. But how much does the US have in gold reserve? Nobody knows. How much does Nigeria have? Nobody knows. But they do have. You get what I'm saying? They collect them through a variety of means. It could be through mining their own, or like supervising it. Maybe they acquired it. Okay, but how do you know what value do you place on it? That's one of the challenges for accountants when it comes to valuing someone's gold possession.
So back to the article. So I'm going to post this comment from the article I read. A single bar of gold is now worth 1 million for the first time ever. The milestone was hit Friday after the precious metal spot price surpassed 2,500 per troy ounce. Gold bars typically weigh 400 troy ounces. So I don't even know what this is my first time, because I've never even read about this before, even thought to it, but I've been first time even hearing the term troy ounces. So a standard bar of gold is valued at $1 million. Very interesting. I definitely want us to do a show on this.
Okay.
Yeah, let's definitely do it, man, and dive into it. I'm so curious. Okay. I mean, because you like today was good because there's a lot of information that came out about regulatory fines and just how that whole process works. So I think the next show let's dive into gold, man. That'll be really
we'll do gold. We'll talk about gold.
So listen, look, we it's an hour now.
One day we'll do a show about the U.S. budget deficit.
That'll be interesting.
Yes, because I have the reason I say that is that I've seen some politicians, especially on the Republican side. Every time they say, how, if JP Morgan was so reckless, compared to how Democrats are spending money. The CEO will be fired and all of that. And it's a lot of things to unpack when it comes to how governments spend money and what drive the government spending. And it cannot be compared to a typical company, no matter how large it is, like JP Morgan or something like that. So I think it's an interesting topic we should also look into sometime down the road.
I love it. I love this what we're doing right now. We're at the end of the show. We're talking about future shows, which makes my job tremendously easier. So thank you very much. Because it's like so hard sometimes. People don't get like every week showing up and having to come up with topics and bring on people that are experts in this to help explain it and break it down is not for the faint of heart. So I appreciate you right now immensely helping me and my team come up with future shows and the brainstorming right now on the spot to do that. So gold and US definitely, because it's those two topics. I mean, you hear about it a lot, but the intricacies around it, and we can go on it from a forensic accounting perspective. My God, that would be really, really interesting. And I would like to learn more about that. But listen, man, always you're a friend of the show. And what most don't know, you're more than a friend to me. You're my family. I've been training me since I was a little kid, and now that I'm older, we can actually talk as peers and go back and forth. This is amazing to me every time you're on, so I love it. What we do for our guests now is we give them the stage so you can talk about your firm, how people can find you, or anything that you want to bring up, and I'm going to give you that time to do that. So I'm going to come off the stage for a second.
Okay. Well, I am Stanley Egbuchulam. I own a practice. It's called Accounting Events LLC. I've been an accountant for forever. I am certified public accountant in New York. But in my practice, we have a lot of service offering. Okay. I worked for big banks in the past doing accounting policy for them. But in my practice now, I have service offerings to small businesses, which includes setting them up for accounting and bookkeeping, doing tax review, tax compliance, doing, for mid-sized companies that don't have their own established accounting departments, kind of do part-time CFO services for them. But for small businesses, it's difficult getting funding to fund the business. So part of what I am doing now is to prepare small businesses to meet whatever requirement, whether it's SBA loan or regular bank loan. And where they don't qualify for any of these, I'm working with a network of about 75 banks and private lenders that can give them the money they need. And a lot of times, approval is just within days. So that's it from me. Thank you. It was my pleasure being on this show. All right.
So thank you very much. Really appreciate that. You could definitely find him. I was going to post contact. We can find him on LinkedIn. Full name, Stanley Egbuchulam. Let me just do something so I can add that to the show, so I can put it to the link so people know where to find you on LinkedIn. I'll add it to the comments. This way I can post it. I'll post it right here. It's the LinkedIn. So you have it on the video. So you can look at a copy of this video, pause it, put that information in, and you can find Stanley and his company and on LinkedIn. So once again, thank you for being a guest. Really appreciate you. For all our viewers, thank you for viewing the show. Thank you for staying on and so forth. Thank you for all the behind the scenes comments and so forth. You can catch us every week, Friday, 12 p.m. EST. Next week, it's going to be another live show. So definitely tune in. We'll advertise it. I wish everyone a phenomenal weekend. And on that note, we are out.
All right. Talk to you later, guys.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.